Hi, thanks for joining me in my market report. My market report is on mortgage rates, and my name is Mike. It's Mark. We like to kind of go into more what impacts mortgage rates on a daily basis, whether if it's economic data that comes out or if it's some headline news or geopolitical. We kind of like to report what's driving it on a daily basis and what to look for in the week ahead. We kind of like to give you, if you're in the market for a refinance or purchase, give you some insight as to what to look for in terms of mortgage rates and help you to make a informed decision as to whether if you want to kind of hold off from locking your rate or if you want to want to lock in right away to plan in advance as much as possible. So hopefully give you the tools that's out there. If you guys, a little bit about myself is I am a loan officer. I do work with the national lender. So if you guys need assistance in whether if it's a refinance or purchase, we're here to help you out, answer any questions, whether if it's about the mortgage rates or mortgage programs or the process or etc. We're here. So please feel free to reach out at any point. Um, so without further ado, we'll just jump right into this report. We'll start off with the economic data that's coming out today. As every Thursday, we get the initial jobless claims. Last week's report came out initially at 419,000. However, that did get revised higher to 424,000. Forecast is supposed to go below 400,000 again at 380, but it came in at the same 400,000. So not too good. We jobs haven't looked good the last 2 weeks as we kind of crept it back above in the 400 range, whereas before we were in the 300s. If you look here, the continuing claims, we saw that revised last week's number revised higher, and in turn went up slightly more this week as well. So continuing claims seem to be rising, something we'll have to kind of keep our eyes on as well. Now we got our first glimpse of the GDP for Q2. Forecast the initial one came in at 6, or that last one came in at 6.4. However, it got revised lower down to 6.3. Forecast for Q2 was 8.5%, and it came in pretty much very disappointing at 6.5%. So obviously very disappointing news right there. Last but not least, we got pending home sales. It jumped up in May. I had a really good month in May at 8%. However, that got revised higher, which is obviously good news, at 8.3%. Forecast is supposed to be a bit of a cool off in June at 0.3%. However, it dropped by 1.9%. So instead of going up anything, it went negative territory. Now, earlier today, or just a little bit ago, we just had a 7-year auction. Didn't go as well as planned. We'll touch on that once we hit the yields as well as mortgage-backed securities, so stay tuned. For right now, we'll jump into the headline news. Stocks are up. It's kind of shrugging out the data that we saw out there and kind of looking more at the corporate earnings. We're still getting some pretty strong corporate earnings out there, and they're getting, I guess, a tepid response to the Robinhood. So maybe a lot of people still haven't really forgiven Robinhood from the GameStop scenario when they kind of interfered from people making bets or making investments or on it. So they had that period where they kind of cooled people off. So again, we'll have to wait and see. But however, they are kind of looking more at the corporate earnings and kind of shrugging out the data, and that's what's kind of driving the stock market up. On the other hand, we got mortgage-backed securities, and it's down a little bit by 3 basis points. As you can see here, we got the wicks on both sides. It's kind of the market's kind of showing some uncertainty there. Usually, when you have that, sometimes we have a trend reversal, so we could see a dip here again. Just come back down a little bit again. So just be prepared that we could see a little bit of a dip. So like anytime here you see these long wicks here, it usually reverses here. We could see another one go up one more time like we saw here, and then reverse downwards. So just be careful where we're at. And another thing is we got the Treasuries. After we were down in the 125 range, and then after the 7-year auction, it did rise. So as a result, we could see later on the mortgage-backed securities catch up to where the Treasuries are. So Treasuries are worsening, but mortgage-backed securities should worsen more as a result of that as well. But they haven't yet done so. So we'll have to keep our eyes on that. Currently, mortgage rates are about the same level we saw yesterday. So this is what we're kind of seeing is pricing for mortgage rates are about what we saw yesterday. Again, Hope that helps you guys out. If you guys got questions or anything we can assist you with, please feel free to reach out. If you guys like the videos, we certainly appreciate you smashing that like button. It certainly helps us out. And I hope you guys have a great rest of your day. Thanks so much for watching. I look forward to see you in tomorrow's video. Have a great day. Bye bye.